Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you already haven't, follow on Rumble, and just remember the disclaimer. Nothing said on this video should be construed as financial investment advice, just my opinions, thoughts on the market. And anyway, I'm assuming most of you, while I'm recording this, are watching the Super Bowl. I think it's cringe. I watched the first quarter because of free food and stuff, but turned it off after that. Don't care for it. Uh, I don't know. Doesn't matter. Not my cup of tea. Decided to go do a video, and let's get into the news and interesting stuff. So, anyway, if you look at this is an interview today. I mean, I just saw this. Trump says U.S. has less debt than believed, and what they said is they have irregularities, duplicates. I have to say, I don't buy that for a second. I think they're defaulting on some stuff or whatnot. I have no idea. I mean, I wouldn't be surprised if they did something like a default and say, no, we actually didn't owe it. We already paid it back and screwed their bondholders. But no, I don't believe it for a second that they have less debt than believed. I don't. I don't really. I'm sorry. That makes me a cuck or a deep state. Like I don't know. I don't believe that. So anyway, I'd still say this is a symptom of the debt bubble. So anyway, that's the first thing. And regarding the debt, and this is the other thing I want to get into, Bitcoin or other things, wants to move the US Treasury to blockchain. I mean, this is a sign of a top. And first of all, this is just stupid. Because crypto can easily be hacked. You saw it with Sam Bankman-Fried, Mt. Gox, other things. If you did my videos where I did the coding competitions, the number one is China and Russia. They have much better technology, stronger tech, stronger. Their tech oligarchs are smarter and better than ours. They'll be able to hack our government and run it at their disposal. So this is just flat out stupid. This is the Silicon Valley lobby. We don't even have. It's just stupid. Some things should not be tech. So they're gonna use the populist sentiment to put AI and so yeah, it's blockchain to safeguard data, federal spending, government payments. This is just flat out stupid. Segregation of duties, which is accounting, is a way to do it. Uh, so yeah, if anything, this is a Dogecoin plummeted by 15%. Bitcoin, Ethereum dropped. Wow, that's very interesting. I just want to do something real quick. Bitcoin price. So that's 86, so that's off its highs. Yeah, the high was, I mean, 105,000 up year to date, but it's off its highs. Probably has one more room. I want to do Ethereum. Let's see what that is year to date. Let's do max, the all-time high. Oh, that isn't even broken. It's 2021 all-time high. So Ethereum probably looks like it's topped immediately. I had a friend who bought it at $9 and then sold it at 100. And whew, bought it at 9, that would have been, but then sold it at 100. So anyway, he claims someone else sold it and whatever, or he wanted him to buy Bitcoins. Not true. Anyway, but yeah, you can see if you want more euphoria, Bitcoin treasury draws. So I haven't really written anything. I don't think I'm going to, but so you can see I am on Seeking Alpha J22 report. You can go find it. I have another one that has a lot more followers, but I don't want to do this one. So as you can see, growing number of companies across different sectors are following MICO strategies of incorporating Bitcoin to the treasuries. Now, this is very bearish for Bitcoin because as these companies go broke, this is going to create a lot of selling. So this is not good for Bitcoin. On the surface, it looks good, but it's not. And the reason why I say that is nothing against Bitcoin, but I see a market crash coming soon. These companies are going to lose a lot of money, force de jour. To cover their bets, they're going to sell Bitcoin. So, if you look at it, I don't think many are, but Kular Technology, sorry if I butchered that name, Rumble, which I'm on. I think this is dumb. I think they should have cash. Only a crypto company should use Bitcoin and Treasury. I think if Johnson and Johnson did it, it was stupid. Same thing with mining. I think some miners should have gold or silver in their treasury, but I don't think they should have. I wouldn't recommend like a tech company having gold in its treasury. So anyway, yeah, Reddit. They've invested. So other Bitcoins, Tesla. Coinbase, Galaxy, looking at all these companies. So I don't think it's going to be too mainstream, but you can see it. So if you look at it, this is more sort of top like euphoric sentiment. So yeah, somewhere it could have one more run up. That's what I was thinking. So, but now is the time for trading in Bitcoin. I think the long-term investments are over. It will come again in about 15 years or 10 years. I don't think crypto is going to go away for good. But this is the other thing I wanted to get into. The housing market. Consumers might be finally accepting that higher for longer rates. Well, this might be a contrarian opinion that rates might go lower for a little bit. I think we are in a long-term interest bull market, meaning the interest rates are going to go up. But it doesn't mean they can't have a 2 or 3 year period where they go down. Remember, markets are linear and non-fractal in nature, as Avi said. They go up, then they come down, then they go up, then they come down. And they can be in a trend, but it's an upward. I think the Elliott wave is, one wave up, A, B, C down, and a wave up. And I forget what the inner workings are, like an A wave, a B wave, a C wave. Uh, so it's up, then a pullback up, and then down, pull back down, something like that. I don't know exactly what Elliott wave is, honestly. Maybe I'll read a book on it one day. Maybe I'll go. I don't want to read Elliott. Just a simple one. I don't want to read the Robert Prechter book. That's like might as well read the Bible. So look at that. Stuck around for 7% interest rates. So stuck around. Yeah, of course, pop-ups. But yeah, that's the thing. Housing market. Oh, cool. Is this mortgage rate percentage who say the rate will go down? 35 go up. 32. Wow. So I do think this is a contrarian opinion for the next year. And that's, the Fed, the QE. Remember I said that Fed and QE is going to come. So I think this is more of an anything that interest rates will fall for a little bit and go down. And if you look at this here, let's see. Do expect right now the futures are up, but who knows? tariffs. But as I said, right now, as we're doing it, futures Dow's up 15 points, so or 105 points. Of course, this is Sunday around 8:20, so as I'm talking about this, but yeah. So these are just things, looking forward to. You can see euphoric signs. I think I do think Bitcoin could go up to 198K, so I'm not saying it's going to really, but I think now's the time to trade and be nimble. I think it's going to go for like a 10-year bear market or 15, maybe till 2040, and then it will begin its march to a million. Just like it went from pennies to 100K, this time it will go from thousands to a million, and then that will complete. And yeah, so anyway, that's all I have to say. But anyway, I will hit this like button, subscribe. More stuff to come for you. Maybe I'll see if I can do another interview or so. Uh, I'm gonna go into another thing, market related but non-market. I watched Dumb Money on Netflix. Great movie about Roaring Kitty. That was pretty cool. Talked about GameStop and all that other stuff. Great movie. I recommend it. In terms of gold, though, let's talk about the after hours. I hope one day I can get 1,000 followers. I can just talk to people, respond to comments, see what people say. I don't. But if you actually look at this, you can tell. I'm gonna share real quick. This is just overnight, nothing big. But yeah, gold up 28.71 is up $10. Going to 3,000. Looks like it's on its way. And let's see if we can get. Now, I do think the stocks will go on a parabolic run. May not be GameStop like run, but yeah, if you look at this, year to date, 11%. If you look at this, started at 19 a year ago, literally in February, it was around 2,000, and now it's at 2,900. A lot of these companies, if you look at it, see if we can find an example. Let's see. Barrick, Newmont. Let's do Kinross Gold. Now, Kinross Gold, let's see, news and investors. I'm assuming it has, I'm literally doing this off the top of my head. So let's see, news and investors. Yeah, thanks. They don't have the financials. Oh, here it is. Let's see, third quarter financial statements. Let's go look. I have no ownership of the stock. I don't own it. It's not, a recommendation to buy or sell. But this was in September. And you can see, whoa, cash, but they could have had acquisition. So don't, they could have borrowed money. Uh, Amount of assets is up. See, liabilities went up a lot, so they could have borrowed. So you can see, but total liabilities is actually long-term debt is down, provision, so that is a good sign. But total assets is the same, but liabilities, so the balance sheet's coming. Equities increased, so that definitely means earnings have increased. Unless they could have done a dilution, but that's what I do. Cash and cash equivalent. So that's either dilution or they really have good cash flow. Let's do the earnings. See, if you look at it, this is what I'm saying. When the next couple of quarters come, look at this. Earnings per share 0.29. That's September 30th, 2024, 9 cents. September 30th, 2023. So quite a jump. And net earnings 390. Obviously, look at this. These are in the millions. Just before that, September 30th, 2023, 108.9. So you can see, and a lot of it came from up here, the metal sales. That's increase in price. So you look at the product sales, that's gone up the production cost, but they also could be increasing production or sometimes declining production too. And of course they have finance expense, so they're heavily hedged, or this is probably something having to do with debt. As you can see, I've been doing this for a while. So net earnings attributable to common 361, 996.1. So you can tell earnings are really increasing, and this is in September. Remember, this isn't what. Let's see what gold was in September of 2024. This was 2,500. Gold's $400 more. So you can see these earnings are really going to go off the table. See they have cash flow hedges, so probably buying those back, and you can tell they're losing money on that. A lot of companies do. Here it is, cash flow. You can see they're losing money on that. So 393. But of course, equity investments. So that's change in fair value. It's probably minors. So that actually, and the reason why this is generally, other total comprehensive income or other comprehensive income. They put these here because, and generally speaking, and you can tell the miners are doing bad because change in fair value negative 14.3, and now this is up 9.7. But generally speaking, why this has happened, it's just very volatile. It's reflected. So look at this, cash flow hedges they made money off of. So they're losing money off their hedges. And then net earnings here, you can tell this is cash flow. So right here, 733. Last year, 406. So you can tell their cash flow is really going up. And then all you do is generally it's operating cash flow minus CapEx. Look at this, CapEx, which is additions of plant property, 278. So really free cash flowing and interest paid. If you look at all that, this is the total 3.18. And if you do 422, I'm just gonna add this on my calculator real quick because you can tell they're paying debt, they have interest payments, and this is why their balance sheet's improving, really, and now let's see if they are paying dividends. I'd say a full comprehension. Let's see, 733.5. So you can tell 278.7, 278.7. I'm just doing interest paid. I'll definitely deduct the interest. Definitely a good amount. And repayment of debt. Ooh, lease liabilities, dividends, 36.9, and then dividends minus 17.1. So what is this? Distributions of non-controlling interest. You add all that up, it's not really, really free cash flow. And we have to remember, gold price is up $400. They'll be able to do that, and this is why I think their balance sheets uh gone up. So And look at this, interest received 6.6. I would add that because this is just off their cash holdings probably. So look at it. But if you look at it from last year, look at it from last year, operating cash flow 406. On a basic one, they have free cash flow, but then interest paid for all the capitalization. And then you add the debt. If you add the debt, they're definitely not like 406. If you add the debt payments, they're definitely not free cash flow. And you can tell they weren't really because proceeds from issuance of debt, 488. So now Kinross at this price is doing pretty well. And let's see what it's doing. And see, this is why I said, like, I think the miners will go up a lot over the next year. It's just a couple of these quarters. But if you look at it, do a yearly basis, yeah, because this 118%. And if you look at it, February, where it was, what was the $5? But now you can see, just looking at the financials, I've said I don't own this stock, I'm not endorsing it or anything, but just generally speaking, the miners will um, do a lot better. And you can tell, like I don't do the exact ratios, but just looking at it, current assets, that is 203, that's up. Total assets, that's up. Current liabilities, now that has doubled, but these will be gone. But if you look at total liabilities, 39, so total assets have increased, but total liabilities have decreased. And you can tell that's going to happen because some of this payment of these liabilities, the current liabilities, is going to come from cash flow. Some of the payments in this area aren't going to be solely from restricted cash, which they have here, cash and cash equivalents. These accounts receivables, for the most part, are probably going to be turned into cash. Income tax recoverable. Hey, look at these inventories. That's going to turn into cash flow. And this is non-cash, so it doesn't matter. So not all of these are going to use to pay. They'll be carried on, but then you have cash flow. So if you look at it, and you can tell they're free cash flowing, and they won't have to dilute or equitize as much. So just generally speaking, this is a lot of merit. This is a lot of what the miners are doing. So I think the miners will do well, and they'll have a parabolic run because they'll go from looking really crappy on the financial statements to looking very good, and you can see they're improving. So you can tell I do have a mind. I can, as Warren Buffett said, like, accounting is a language of business and it's what I do. So anyway, hit that like button, subscribe, and I'll see you next video. And just also remember the disclaimer, nothing said should be construed as financial investment advice, just my opinion.